Hey, all, welcome to ShareTreck. This is Raj here. I hope you are having a good time at the market and also at your work. Today, I'm going to talk to you about Illumina because Illumina is a very interesting company. I'll just give you an anecdote from my childhood, which is analogous to what is happening with Illumina right now. As children, when we used to celebrate Diwali, which is a festival of lights, we used to burst firecrackers, and some of them were pretty strong bombs, like the kind which could hurt you if you were in its proximity. So sometimes it would so happen that we would light the fuse of a firecracker like that and run away with our hands on our ears, waiting for the explosion, but nothing would happen. And after a short while, we'll start gingerly inching back closer to check if the fuse is still lit and whether the bomb is ready to go off. And our hearts would be pounding with fear as we approach the firecracker. Sometimes it would blow up in our proximity, and other times we would find the fuse had extinguished. With Illumina, I get a similar trepidation as I watch the stock price daily, day after day. Let's take a closer look and see if the fuse is still intact with Illumina. Let's get started. Welcome back, friends. Illumina is a fantastic company with a scalable suite of systems for genomic sequencing and analysis. They have many alliances to further strengthen their leadership position in the industry. Due to some reason, they spun off their Grail unit earlier and then decided to reacquire it. This is when problems struck the company. The EU regulator and FTC were against this acquisition, but Illumina went ahead regardless, and both the bodies decided to initiate action. EU regulators have said that there will be a fine of $453 million and 10% of Grail's worldwide turnover. The FTC filed a lawsuit in March 2021 against Illumina to stop Illumina's $7.1 billion deal to buy its former subsidiary Grail, arguing that the deal would slow innovations for tests designed to detect multiple kinds of cancers. The vote within FTC was unanimous to sue Illumina. The judge rejected the FTC's position that the deal would adversely affect competition in a putative market for multi-cancer early detection tests, Illumina said in a statement in 2021. And since then, Illumina has set aside $453 million for a potential EU fine and said it would appeal against any fine like the 10% Grail turnover worldwide that EU had stipulated. Recently we heard that Illumina and Grail have argued that the Federal Trade Commission, having communicated with foreign competition authorities, basically the EU competition authority, when reviewing their merger with Grail, was evidence of unconstitutional influence, bias, and undue process violations. So this is their argument at this point of time. We don't know whether it's going to succeed or not. And we are still waiting for the scepter of the EU action to be lifted so that the stock can reach its true valuation. So this is one dimension of the problem with Illumina. Meanwhile, startups and limber competitors who are small and with lesser overheads are coming up with more cost-effective genomic sequencers. Illumina still has a scale-level array of systems which big companies can use, but even as it was launching their latest NovaSeq X Plus sequencing system, which is the peak of the industry, and projecting a revenue increase of 7 to 10% for this year, its competitor Complete Genomics had launched the first genomic sequencer that could sequence a genome under $100. So for a human genome to be sequenced in the Complete Genomic system, it would take $100 or less. So this is what stole the thunder from Illumina. And at this stage, I was trying to judge if the fuse was still lit on Illumina, as nothing happened with their stock price because their Big Bang announcement of NovaSeq X was neutralized. And this was followed recently by an EPS miss by Illumina for quarter ending December 2022. They came in at $0.14 for EPS as against an expectation of 0.265, which was a miss of 47% on their EPS, which is something the market doesn't forgive very easily. Part of the problems were a drop in China revenue, because China was all locked up and they had zero COVID policy and all those things. According to Illumina, 155 orders have been placed for NovaSeq X systems, with more than 250 customers deemed advanced pipeline prospects. This shows a strong market for Illumina and potentially a better quarter ahead if you forget its Grail troubles. On the brighter side, you can also remember that China has now opened up, and revenues from China could bounce back into the equation going forward and improve their revenue and earnings going forward. Also, consumables as well as services on an expanding installed base is a growing revenue stream that's going to accrue to Illumina, adding further to its revenue going forward as well as earnings going forward. While in the current market condition with increasing interest rates, I personally think that Grail is a big liability. But some analysts with more experience than I have viewed Grail as an asset that will benefit Illumina even if it is spun off again, because when it is spun off again, they will get more money. So valuation is becoming a bit tricky for this company. So I have taken the aid of a website called simplywall.st. It's a source for great company data and analysis, and recommend that you guys bookmark this website, check it out. It's a wonderful website. So let me show you some of the data I have taken from simplywall.st. So here I have this chart which shows lower price volatility for Illumina when compared with the industry. So it's much better than the industry. So that shows a very good aspect of Illumina for us. It's a better company than the industry that it's in. And if you look at the comparison with peers for price to sales, you can see that the peer average is 6.3, whereas Illumina is above the peer average. So, but it's not that high because there are other companies which are way ahead of it. And then when you compare with the industry for price to sales, it's below the industry level. Industry is at 4.6x, whereas Illumina is 7.2. So as you can see, there's a higher price to sales for Illumina when compared with the peers as well as with the industry. So it's priced higher, which also means that investors are willing to pay a premium for future prospects for this company. And next, I would like to show you the other chart where you can see its valuation. It seems that we have more or less fair valuation for Illumina because its current price is 208.03 and the fair price is 216.57. So it's a very, very small amount of gain still out there, somewhere around $8 to be gained. And when we look at our short-term and long-term assets out here, we can see that in the long-term picture, I think Illumina is absolutely fine. It has got way more assets than liabilities. But in the short term, the assets are not that high as compared to the liabilities. Typically, you'd like to have a 2:1 ratio where for every 1 unit of liability, you have 2 units of assets. But we are not in that situation. So there is a bit of weakness out there, but still it's not too bad. And if you look at the earnings and revenue growth expectation from analysts, forecast annual earnings growth for Illumina is 52.9%, whereas the industry and the market is expected to grow somewhere around the 15% range. Now, next, if you look at the forecast annual revenue growth, Illumina is expected to grow at 12.5% as compared to the 6.5 to 6.9 range for the industry and the market in general. So in both counts, there's a high expectation from the analyst from Illumina, and that is reflected in its high price to sales comparison as compared to its peers as well as compared to industry. And then if we go on further and if you look at the pricing, the price estimate according to a whole bunch of analysts ranges all the way from a low of $150 in the next 12 months to a high of $303 in the next 12 months. And each of these analysts have got their own models and assumptions based on which they come up with this estimate. So you'll find that there's a median of around 232.50, which is a target price I would like to look at. And in terms of ownership, Illumina is heavily owned by institutions. 91.3% of Illumina shares are held by institutions and 8.5% is held by the general public. So even though the general public doesn't hold much, the insiders are very, very less. They're at 0.1%. So it's a very small amount of holding by the insiders. And the top 5 holdings, institutional holders are Bailey Gifford and Company at 10.6%, the Vanguard Group at 8.24%, and BlackRock at 7.63%. and State Street Global Advisors at 4.21%, and Edgewood Management at 4.1%. And out of these, Bailey Clifford had reduced its stake by 11.97%, and also Edgewood Management has reduced its stake by 12.77%. So there is a little bit of reduction out here, whereas the other three have increased their stake marginally. So that's what we see out here. So friends, as you saw, Illumina is a complex and interesting company. Valuation is difficult. We have seen the valuation of around $232, which is the median valuation. Now let us keep all of the things that we saw in mind, and let's go to TradingView chart, and we'll try to arrive at what could be a possible share price for Illumina in the next 12 months, assuming technical analysis is going to give us the answer. Let us try that exercise. Well, here we are in the familiar TradingView platform, and I have expanded out this chart just to show you the overall perspective. I removed all the simple moving averages so that we have a clean picture. I'm going to start off by a close-up zoom, by looking at a bit of a close-up, and then we'll go in for the bigger picture. I'm just zooming out so that you can see very clearly, because the price action for 8th of March was a doji candle, a lot of indecision, and it was just below this horizontal line of resistance at 208.37. It couldn't pierce above it. It came back down, and it ended down below it. And as you can see, we have been consolidating into we have tightly winding up into a coil, ready to break out on either the upside or the downside. And at this point of time, the MACD is ready to turn over to the bearish side, and the momentum is just at around average, and it is flat and potentially pointed downwards. So we don't know what's going to happen out here. Now, with that said, let's zoom out. And as you can see, for quite a while, we have been consolidating around this line of resistance. And it becomes even more clearer when we see that ever since we dropped somewhere around 5th of May 2022, we have been going flat out, consolidating around a particular range out here. I'll just draw two lines out here, just so that we can see the range. So that is a range on the top, and then I'll draw one more range at the bottom. So this is the range at the bottom between which we have been moving around. We have not broken out of this at all, and this has been right from May 2022. So with that said, I think that if we were to look at what is going to be the price of this share at the end of this year, if we wanted to hazard a guess, I would say that let's look at what was the peak that we were in. It was 426.83 on 11th of January 2022 before it started falling. Now, if we give some allowance for Grail, and we say that, okay, let us look at something which was lesser, I would look at 369.96. I'll take this as a potential target that we are approaching. So what I'm going to do here is I'm going to draw a straight line from this point, and I will consider that to be the ultimate resistance, and that's the maximum potential that we can have. Now, having said that, I'm just going to pull this out all the way up to December. So this is December 2023 that we are looking at here, and we want to project the price what it will be in December 2023. Assuming that our earnings expectations are met and exceeded going forward, then we are going to look at an increase in the share price. So we'll assume that somewhere around April we are able to break out above this, and then our first resistance is going to be at 254.05, and that could happen somewhere around June. And if we still continue to go well and there is no adverse ruling on Grail and everything, we assume everything to be positive, then our next resistance is going to be coming somewhere around September, which will be somewhere around 286.31. which is this line out here, 286.31. The question is, are we going to be able to reach out there, assuming Illumina performs very well? For that, I would like to take you to another publication which says the Fed only schedules 8 meetings a year and so does not meet in April. The market currently expects rate increase of 0.25 percentage points at each of these upcoming 3 meetings, and the Fed may then hold rates steady for the second half of the year. And we are already in March, so we are going to have at least one interest rate hike at this point of time. So let's go back again to our chart and let us look at interest rate hike happening somewhere out here, which may push the share price down again. So we'll have to again recover the lost ground. So instead of breaking out upward, I suspect that we are likely to break out downwards, and then we have to move along. So I'm going to extrapolate this. Sorry, my mistake. I'm going to extrapolate this line which is now going to perform the role of a resistance for us going forward. So I'll mark this red, and I'm going to grab a pen from here. And I would say that we are most likely to move somewhere out here, then come down out here, then move further, coil around. Because all the while we are going to have resistance from this diagonal line of support, there has to be something spectacular that might happen for us to break through above this. And it's conservative to assume that such a thing might not happen. And so if we continue to keep on going up, which is the best case scenario, we are going to be constantly under the diagonal line of support out there, and we can reach somewhere around 239.95. And for this, I'm assuming that we are going to have a bull channel forming, which is going to give us a support. And I'm going to mark this as green. So this is my projection that somewhere around December, we should be at around 239.95. This is assuming no adverse Grail ruling from EU, because if the ruling goes against Illumina, then they are going to have to pay $437 million, which they have already accounted for and kept aside. But the 10% of Grail turnover is something that's going to hit. And also the news that Illumina has to pay this hefty fine is going to make many less informed investors to start panic selling because they don't know that there is a reserve already in place and it has been priced into the market price. So there'll be a sudden dip in the market price and the share may come up again. So it'll be one of these drops and coming up kind of a thing. So this is a very rough illustration of what it would happen. It may not be this uniform, but it may be sharp in some places. It may be drawn out in some places, but essentially we are going to end up somewhere out there at around $239 or $238 around December. And this also assumes that Illumina continues to meet its targets for all its sales, and it continues to perform at the current level, and that the lower cost sequencing machines, genomic sequencing machines, does not make a big dent in its revenues and in its earnings because they have scalable systems and their clients are much bigger and less price sensitive. So that's what I would expect. I think that the $100 or less sequencer might impact PSEB more than Illumina. That's my feeling. So friends, this is what I have here for you. And of course, I'm going to draw this line further out here. So this one resistance, this another resistance, and we'll also potentially have one more resistance out here, which will be somewhere up here. So there is going to be a little bit of give and take out here before the price can go further up. So there's the resistance line out here as well. So that's my rough estimate from a technical point of view. So friends, that brings me to an end of this video. It has been a very interesting exercise for me to indulge in my fancies about how Illumina price will go around. It still looks like that firecracker to me, whose fuse has probably got extinguished. Whether it's going to blow up or it's going to stay extinguished, I don't know. We'll find out soon. But it also depends on how the inflation proceeds and how the Fed starts increasing interest rates. Of course, the analysts are all saying that there's going to be a 25 basis point hike going forward. But they can change their tune within another 3 or 4 days when they get more information, when we have more data coming out from the economy. The Fed may change their minds and they may even go for a 50 basis point hike. We don't know. And what we don't know, we have to treat it very conservatively. So if I look at it conservatively, my target would be somewhere around $210 to $240 is the price range I can talk about. I can't be more specific than that. And then if you ask me, Raj, are you going to put your money on it? My answer is no. I don't have the money in the first place. And even if I had the money at my age, I wouldn't like to take this kind of a risk. So this is just my opinion. You guys have to exercise your own due diligence, talk to your financial advisor, do your due diligence before making any investments. So that's all from me for today, my friends. If you like this video, please press a like out there. And if you're not yet subscribed, please subscribe. Thanks and have a great day. Bye for now.